Ethereum is on the edge and most people are not prepared of what's likely going to come. This year is the Ethereum dominance and we've got clear narratives of why Ethereum outperforms the rest of crypto or why it underperforms. This year was in anticipation of the merge, when Ethereum moved from proof of work to proof of stake. Once that happened, once the tokenomics of Ethereum improved, that was a sell the news event and Ethereum sold off much more than the rest of crypto. And then Tom Lee stepped in. He started buying at the historical all-time low in Ethereum dominance, but he slowed down his purchases since the end of August of last year. Now, the standard measure of Ethereum dominance just looks at Ethereum's market cap and compares that to the entire cryptocurrency market cap. Now we can adjust this by excluding all of the stable coins and just look at how important is Ethereum within all the volatile cryptocurrencies. That way we get a more accurate picture of what's going on. The way to calculate this is to take Ethereum's market cap, so ETH, / total ES. Total is the cryptocurrency market cap, ES means excluding the stable coins. And we can see how Ethereum since the end of August of last year is in a very constant downward trend. And we are now even at the upper end of that downward trend. Ethereum could potentially underperform the rest of crypto by more than 12% in the next weeks. Now, I like to run backtests. I like to run simulations of buying and selling various assets. And for Ethereum, I wanted to find out what's the best moving average crossover. What's the best golden and death cross? And here is that result. If we take the 12-day simple moving average relative to the 33-day simple moving average, we outperform buying and holding Ethereum massively. We also reduce our risk. The maximum drawdown for Ethereum was 90%. Trading according to that strategy gave us a drawdown of only 54%. And we have just gotten a sell signal. So we got our death cross and this was announced to the premium members. The signal happened over here. Since then, Ethereum dropped by 5%. And so I like to simply follow the trends in crypto. It tends to outperform just buying and holding. When crypto goes down, it makes sense to rather cut losses. When we've got positive momentum, it makes sense to double down. And unfortunately, since we just got the death cross, there is the real risk that we're going to fall below a long-term support line. And the problem is that Ethereum has a higher correlation to the rest of crypto. So when Ethereum goes up, then many altcoins go up as well. When Ethereum goes down, many altcoins go down as well. Most people think that Bitcoin moves the market. But really, when we look at this mathematically, when we look at the correlation, which assets actually move more in tandem with each other, it's Ethereum that's more correlated to the altcoins than Bitcoin. Ethereum runs the trends. So a falling Ethereum price would be terrible for the altcoins. Have a look at this. In green, we've got the Ethereum market cap. In blue, we've got the altcoin market cap measured as others. So that's the altcoins that are not in the top 10. There are temporary divergences every now and then, but really in the grand scheme of things, those two parts of crypto tend to move in the same direction at the same time. We can also fine tune this. So this is now the Ethereum market cap relative to the others market cap. A chart that starts in 2018. Sometimes Ethereum is expensive, sometimes the altcoins are expensive, but we tend to trade in a somewhat predictable range. Ethereum can be up to 2.3 times bigger than the altcoins, or it can be slightly smaller, 90% of the altcoin market cap. The dotted line here, that's the long-term average ratio, which is at 1.5. So on average, Ethereum's market cap is 1.5 times larger than the market cap of all these smaller altcoins. We are currently extremely close to that equilibrium. So if Ethereum goes down from here, very likely the altcoins will simply decline at the same pace. It's not like Ethereum is particularly expensive or particularly cheap versus the altcoins. And it's also far from certain that Ethereum will hit the lower band again, because we did see turnarounds at the equilibrium several times in the past. We could very easily also see ETH doing slightly better than the altcoins, which doesn't mean that Ethereum will go up in price. It simply might fall less than the alts. But really, we are currently extremely close to the equilibrium. So we should expect very similar performance of Ethereum and the altcoins in the near future. And so that then begs the question, at what point do we actually see a bottom of this bear market? At what point does it make sense to buy again? I like to look at Bitcoin to answer that question, because for Bitcoin we've got the longest price history. Historically, the average Bitcoin investor had to be in unrealized losses for a bear market bottom to occur. So the NUPL, the net unrealized profit and loss, had to be in the red. The average Bitcoin investor had to see losses. Currently, the average Bitcoin investor is still in profit, even after this decline. I think the reason why we tend to turn around once people are in losses is because most people tend to not sell when they long-term believe in an asset and they're currently in losses. They simply just wait out the bad times. So imagine you have a house, imagine you bought this for $1 million, now it goes down to 900,000 to 800,000. If you are not forced to sell, you simply just wait it out until the house is more expensive again. I think the same is happening for crypto. If you bought Bitcoin and you believe in Bitcoin that it will appreciate over the next 5 or 10 years because it has better tokenomics than fiat, right? Fiat expands much quicker in its supply than Bitcoin. So if you believe that Bitcoin long-term holds its value, but currently you're underwater, you simply just wait it out. And that's, I believe, is the reason why we tend to bottom out in bear markets when the aggregate market supply is in unrealized losses. But again, we are not there right now. There's another useful metric, the CBBI. It combines several momentum and valuation indicators, things like the NUPL, what we just looked at, but also trading activity metrics like the realized HODL ratio, or valuation metrics like the Trololo line or the market value to realized value Z-score. A lot of interesting metrics that all combined come to this oscillator. And interestingly enough, we did bottom out very close to 0 at the bottom of a bear market. We tended to top out very close to 100 at the end of a bull market. And so this is a good way to potentially time bottoms and tops. It's not perfect, but still it's definitely useful. And currently we are at 31. The momentum is clearly bearish, but we are not yet near a bear market bottom. I think it makes sense to stay cautious. I think it makes sense to wait at least until we hit the realized price. That's at $54,000. Maybe to even wait until we hit the long-term holder realized price, which is at $44,000. We did fall below that long-term holder realized price in prior bear markets. The reason why I think it makes sense to not buy earlier is because there's still a lot of risk in the market. And with risk, I mean the spillover effect from traditional finance. We know that there's correlation also from traditional finance to crypto. So when we had the COVID crash, when stocks sold off, a few days afterwards, crypto sold off as well, even more than stocks. Traditional finance, I believe, still has very high valuations. And if those valuations come down, they will definitely drag Bitcoin and crypto as a whole down with it. Here, this is what I mean. This is a long-term S&P 500 chart relative to the US money supply. It starts in 1959. And there are periods where stocks do not outperform the monetary debasement. And there are other times when stocks do phenomenally well. This year was the dot-com crash. This year was the global financial crisis. The yellow circle marks when Bitcoin was launched at the height of the global financial crisis. And this year, that's today. We are at very similar valuations to the peak of the dot-com bubble. And I'm not saying that we have to come down from here, but at least we have been oscillating around some kind of equilibrium over the last 66 years. And if we just come back to the equilibrium, stocks would come down by 45%. And they've never seen a correction like this during Bitcoin's lifetime. So when we look at things like the CBBI, they might even be too optimistic. They might even overinterpret and overestimate a potential bear market bottom. That's why I think it's dangerous to buy already at 31. Methods like the realized price or the long-term holder realized price, they assume that we will always be in an environment like this. We don't have any history of how Bitcoin or crypto would have behaved prior to that. And prior to the creation of Bitcoin, we have seen much more volatility. So that's why I think it makes sense to rather err on the side of being too cautious than too optimistic. Maybe 44K isn't even the bear market bottom this time around. It's not just the S&P 500 relative to the US money supply, right? It's also the S&P 500 relative to the earnings. This is the Shiller PE ratio. So clearly stocks are currently not cheap. Clearly they have expanded in their valuation since the creation of Bitcoin. And if the bear market continues, Ethereum has a very good chance of getting sold off even more than Bitcoin, which will then of course spill over to the altcoins as well. Some people call analyses like this too pessimistic, but I just think they are realistic, right? We are just looking at how did assets behave in the past. I'm not saying that we have to sell all of our crypto. All I'm saying is that we have to measure our risk to reward properly. If you're currently 80 or 90% in technology stocks and in altcoins, it probably makes sense to rebalance somewhat. If you got some value out of this video, feel free to give it a like. It will help the channel grow. Feel free to also subscribe. I publish videos regularly. See you next time here on YouTube, or potentially see you also in Premium. This is where I share my own trades. This is also where I get the signals whenever the momentum for a particular asset changes. See you next time. Bye bye.